Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. On the program today, oil prices continue to rise as U.S. Congress certifies Joe Biden as next U.S. president. In Tanzania to sign $1.32 billion rail contract with Chinese firms. Vaccines to cost South Africa $1.4 billion in long-awaited plan. We tee off with the intraday market numbers. Here in Africa, it's all green as all the markets we track were tilting sunny side at intraday. Here in Nigeria, the index was up 0.13% as at midday. South Africa's JSE index extended gains as stimulus hopes boost miners. The index was up 0.75% at intraday. Egypt gained the most, up 1.13%. Kenya closed positive on Wednesday. And the story is the same in the Middle East. All the markets were in the green at intraday. Abu Dhabi was up 0.68%. Dubai was trading up 0.76%. Elsewhere in the region, Qatar was up 0.93%. And Saudi Arabia was up 0.51%. And in Europe, stocks edged higher this morning following a projected win for Democrats in the U.S. Senate following dramatic scenes when pro-Trump rioters stormed the U.S. Capitol building. Let's hear more from Chelsea. Good afternoon, Chelsea. Well, global stocks are trading at record highs, even as Washington apparently descended into chaos as Trump supporters stormed the U.S. Capitol. What's the reaction been like to the unrest in Europe?
Well, politically, we've heard many European leaders come out and really condemn the violence that we saw yesterday in Washington. German Chancellor Angela Merkel said that she's furious and saddened by what happened. And we heard similar remarks from French President Emmanuel Macron. He says what happened yesterday in Washington is not America. British Prime Minister Boris Johnson just called these scenes disgraceful. So politically, there has been a lot of concern, a lot of worry sparked by the storming of the U.S. Capitol. On markets, though, it's been pretty much brushed over. We've seen stocks here in Frankfurt hit a record high today. The Dow in the U.S. as well was at a record high yesterday. So investors are very much focused on another political race in the United States, the runoff election in Georgia, which delivered Democrats control of both houses of Congress as well as the White House. That really clears the way for a big stimulus package that would benefit both the United States economy, but also the rest of the world.
In the meantime, Twitter and Facebook have blocked President Trump's account after being criticized for allowing misinformation that led up to yesterday's violent clash. Will this add to the pressure that social media companies are under?
It certainly will, and social media companies like Facebook and Twitter have already been facing a lot of criticism for their role in the spread of disinformation. And we've seen congressional investigations. We've seen Europe, for example, threaten to penalize these companies for allowing misinformation to spread. Excuse me. And this is really an example of what this can lead to. And yes, Facebook and Twitter have taken the step to suspend these accounts and also to remove some posts that President Trump had been sharing. But at the same time, critics say that they should have taken these actions earlier. These events have been planned for weeks on Facebook. Some people have been threatening to be violent at these events on Facebook. And President Trump has been sharing his thoughts about how corrupt the election was. Ideas that have been largely overturned for several weeks now as well. So for critics, they say this is really too little too late, and these companies need to be held accountable for their role in the spread of misinformation.
And with only 2 weeks left in the White House, the Trump administration is reportedly looking to blacklist popular Chinese companies Alibaba and Tencent. How have markets reacted to this so far?
It's been a big blow to Alibaba and Tencent shares. Those are the biggest Chinese companies on the market, and they have been very popular among global investors. So they aren't just Chinese companies; they're very big investments for a lot of U.S. Asset managers, a lot of small U.S. investors. And what the U.S. administration is now saying is that if they proceed with this threat to blacklist Alibaba and Tencent, U.S. investors would no longer be able to invest in Alibaba and Tencent shares. That's obviously a big blow to the companies themselves, but also investors who have been really excited and making a lot of money off of these shares. So we've seen shares in Alibaba and Tencent fall between 4 and 5% today. This also comes just amid a big escalation in the tensions between the U.S. and China. The U.S. Has also put many other companies on the blacklist, and the New York Stock Exchange is going forward with its threats to delist a couple of Chinese telecom firms after a lot of back and forth. So this is just another, salvo in this war between the U.S. and China over financial investment in the business world.
Thank you, Chelsea, and have a great day. And UK construction companies have reported a further expansion in business activity in December. According to the latest survey from IHS Markit CIPS, they fared better than their counterparts in the Eurozone, where construction activity declined for the 10th month running. Let's bring in Juliana at this moment. Hello, Juliana. Good afternoon. Well, UK construction is enjoying a rebound at end of 2020. What drove that rebound?
Yes, great day for construction. They extended their robust recovery in Q4 2020. There are several things, but mainly this is to do with the housing market. Once Boris Johnson, the Prime Minister, gave it the green light to open very early on during the first lockdown, house prices soared. There was lots of interest, especially from people that were living in the City of London that decided to move out of London because of this working from home arrangement, and stamp duty, which is a pretty high tax that people have to pay when they are purchasing homes in the UK. That was scrapped. So that's one of the reasons why construction is doing pretty well. So December's PMI figure reads 54.6. It's a little bit lower than the 50.7 reading in November. However, as we know, anything above 50 does show that the market is expanding rather than contraction. If we look at the wider PMI figures, which of course gives us a really forensic look into how the private sector is going, it's not looking that great. Lots of talks about this double dip recession, particularly as we had a bad service reading yesterday, and we know that the UK relies heavily on its service industry. So even though construction is looking good, the overall picture is not looking that great here.
In the meantime, Goldman Sachs is painting a grim picture for the UK economy. Now, Goldman Sachs says, given the return to nationwide lockdown, it expects a 1.5% contraction in GDP between January and March, putting the UK economy into a double-dip recession. Is this report really getting the government thinking?
Well, yes, hopefully the government is thinking, but of course, I think it's been made pretty clear, especially given Prime Minister Boris Johnson's televised address a couple of days ago, that the government they absolutely have to put the safety of Britons and the well-being of the NHS well above opening the economy. I think almost a year ago, when we first went into our lockdown, I believe the Bank of England Governor Andrew Bailey was one of the first stakeholders here in this country to say that he would rather the economy not open so quickly, because if we do, infections will rise and we'll have to close again. And, that's exactly what's happened. I think earlier on, when we introduced the tiered restrictions, there were lots of MPs from both sides of the floor in the dispatch box, really arguing and bemoaning that already beleaguered businesses were receiving the final death knell. But, yesterday, for example, we had the figures showing that over 1,000 people had died. The amount of people that are in intensive care with COVID is striking, and it is getting out of control. So, yes, there are concerns. Goldman Sachs, as you said, they believe that the UK will be going into a double-dip recession. They say 1.5%, broadly in line with what the Bank of England is saying at 1%. I think Deutsche Bank have also put out a statement last week. They said that they forecast a 1.4% drop. So that is to be expected. But, if these cases come down, we'll be out of this lockdown soon. We hope. The inoculation is going on. We've got 2 vaccine administrations going on at the moment. And Goldman Sachs did say that they're optimistic that there will be a robust return in market activity in the spring. So that's what we're all looking forward to, Chime.
Well, what's the intraday market numbers saying, and what are the market moving stories at the moment?
Well, it was a positive start to the FTSE this morning, opened well up top. Lots of people were even thinking we could get to that 7,000 mark, a point not seen since pre-pandemic levels here in the UK. But those gains have been reversed. In intraday, the all-share is down 0.33%. The FTSE 100 is down by 0.29%, and the FTSE 250 is down by 0.41%. On the currencies market, British pound is down on the US dollar by 0.25%. Up on the euro by 0.34% and up on the Japanese yen by 0.31%. It appears as if investors who had kind of turned their eye to the insurrection that's happening in Washington this morning, but as the hours have gone on, it seems like the appetite for new stock is not really on the top of the agenda for investors at intraday.
Well, just wondering if they are just reading the Goldman Sachs report there. Anyway, let's continue to track the numbers. Thank you, Juliana. Enjoy the rest of the day.
Thank you. Thank you.
And stocks in the Asia Pacific were higher today after the Dow Jones Industrial Average surged to an all-time high overnight despite unrest in Washington. In Japan, the Nikkei 225 jumped 1.6% to close at 27,490.13, while the Topix Index gained 1.68% to end its trading session at 1,826.30. South Korea's Kospi advanced 2.14% to close at 3,031.68. Mainland Chinese stocks saw gains on the day, with the Shanghai Composite up 0.71% and the Shenzhen Component rising 1.11%. Hong Kong's Hang Seng Index lagged the region's major markets as it dipped 0.52%. Stocks in Australia jumped, with the S&P ASX 200 up 1.59% to close at 6,712. And U.S. stock futures rose in early morning trade on Thursday as investors digested the likely event of a Democratic-held Congress and continued to look past riots at the U.S. Capitol. Dow Jones Industrial Average futures jumped 161 points. S&P 500 futures and Nasdaq 100 futures also both traded in positive territory. The Labor Department released its last week's jobless claims at 8:30 a.m. Eastern Time. Economists polled by Dow Jones are expecting 815,000 Americans filed for unemployment last week compared to the previous week's 787,000 claims. Bath and Beyond, Constellation Brands, Walgreens, Boots Alliance, and Conagra report quarterly earnings before the bell today. Chipmaker Micron reports after the bell. On the global oil market, prices were steady this morning after supporters of President Donald Trump stormed the U.S. Capitol, with investors focusing on the likelihood of tighter supplies after Saudi Arabia unilaterally agreed to cut output. Brent crude was up 8 cents at $54.38 a barrel after gaining 1.3% overnight. U.S. West Texas Intermediate gained 11 cents to $50.74, having slipped earlier in the session. Saudi Arabia, the world's biggest oil exporter, said it would voluntarily cut 1 million barrels per day of output in February and March after OPEC Plus, which groups the Organization of the Petroleum Exporting Countries and other producers, including Russia, met earlier this week. And in metals, gold prices edged lower in early trade as firmer Treasury yields eclipsed support from a Democrat sweep in Georgia Senate runoffs that boosted hopes for most stimulus. Spot gold eased 0.1% to $1,916 per ounce after declining more than 1.5% in the previous session. U.S. gold futures climbed 0.5% to $1,918. Among other precious metals, silver shed 1% to $27.03 an ounce. Platinum eased 0.9% to $1,091, while palladium rose 0.1% to $2,441. And commodities market update is next. Do stay with us. On domestic commodities market update, our focus today is on LNG, and Oluwaseyi Omidora, research analyst with financial derivatives company, joins us now. Hello, Shay. Thank you very much for joining us and good afternoon to you. Hello, Shay. LNG, of course, is Nigeria's second largest export earner, contributing about 14% to export revenues in 2019. Now, the EIU is estimating that global demand will increase by about 5.7% this year after a sharp decline in 2020. So what will this sharp increase in demand mean for Nigeria's revenue, economic growth, and, of course, external balances?
We need to begin by looking at what is basically driving the increase in demand for LNG. Now, as we have seen, the global economy contracted sharply in 2020 because of the coronavirus pandemic. Now, in 2021, the primary driver will be an expectation that the global economy will recover from this dip it experienced in 2020. Now, what this means for LNG in particular is that an increase in demand will lead to an increase in price for the product. And like you mentioned, Nigeria, it makes up about 14% of Nigeria's net exports. This is definitely a good thing for Nigeria in that the government revenues will increase massively if this forecast materializes. And this will also help in funding infrastructure projects, which have a multiplier effect on output and productivity. On the reserves, on the external reserve side, since the price of LNG is benchmarked against the dollar, now it's going to help increase the external reserves, and it's also going to help the CBN also to further defend against, gives CBN the ammunition to defend properly the naira in the forex markets.
Now, NLNG is considered a role model for public-private partnership and incorporated joint ventures in Nigeria. Train 7 of the NLNG is currently under construction. Now, do you think that this will help reduce Nigeria's dependence on crude petroleum and, of course, enhance its economic diversification program?
The Nigerian government, NNPC, owns about a 49% stake in NLNG. But them now also opening it up to private ownership as well is a good thing, because anything that has to do with investment in Nigeria is a good thing. Now, it also helps in that with private investments, the private investments come to the table here, and what they actually bring to the table is their expertise in handling major investments, in their expertise in handling major projects. They also bring to the table the technology they own. It's also going to lead to a decrease in bureaucracy. Now, all of these things are a positive for the LNG industry in Nigeria. Now, as regards what the implications will be, Nigeria's, whether it will reduce Nigeria's dependence on oil, it definitely will, because if we look at it, an increase in investments will definitely help, as we said, with the Train 7. It's also going to help facilitate new developments, new investments, new projects. And this, of course, will also help in extending what it's going to increase it's going to decrease, Nigeria's dependence on oil, in that the reserves, our external reserves, is going to increase our external reserves from LNG in particular.
All right, let's look at it this way. LNG now is considered as one of the cleanest fossil fuels. With President-elect Joe Biden now to be sworn in on January 20, and the U.S. going back to adopt the Paris Climate Accord, the demand for coal, crude oil, and other energy sources high in carbon emission will likely fall. On balance, what do you think will happen to Nigeria and its plan for rapid recovery in 2021 and, of course, 2022?
In the short to medium term, that's 2021, 2022, there might not be a significant impact on the Nigerian oil markets, because even with the transition to cleaner energy, we don't expect this transition to be drastic, and it's not something we expect to see that's going to happen massively in 2021, 2022. So I don't believe it's going to alter Nigeria's foreign currency earnings from oil in any particular way. However, looking long term, I believe it's something the Nigerian government should start looking at. Investment in alternative energy sources is something the Nigerian government should start looking at, because as the world transitions from oil into renewable energy, our earnings from oil will decline, but then we are going to gain in that we also export LNG. However, the imbalance is so much at the moment that we actually need to increase investments in LNG and other renewable energy sources, so that we can also improve on our foreign currency earnings in the renewable energy sector.
All right, thanks, Oluwaseyi. Thank you so much for your time. Enjoy the rest of the day. And Tanzania will seal a $1.3 billion standard gauge railway network contract with 2 Chinese companies today as it seeks to develop about 340 kilometers linkage. The East African country's foreign affairs minister says the contract will be financed by the government at a cost of 3.06 trillion shillings. That's about $1.32 billion. Chinese Foreign Affairs Minister Wang Yi is scheduled to arrive Tanzania today on a 2-day visit, with the signing being part of his official tasks in the country. And relief might be coming for millions of people in South Africa as the country's medical insurers have revealed plans to pay for 14 million people who don't have health coverage. According to the Chief Executive Officer of Discovery Health, Ryan Noach, the program will cost as much as 7 billion rand, that's about $464 million. Noach adds that the subsidy will include medical aid members, with the funds already being set aside. South Africa's government is facing increasing criticism from labor unions, health officials and opposition parties for its failure to procure vaccines, even as at least 37 nations begin inoculating their populations. With more than 1 million confirmed infections and over 30,000 deaths, South Africa is Africa's worst hit nation. The economy is estimated by the government to have contracted by the most in 9 decades last year as a result of a lockdown related to the outbreak. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.